Hey guys, what's up? This is Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for October 14th, 15th, 2017. We're going to take a look at several of the more important charts in the making up the overall global markets. And we're going to do so from a daily, weekly, and monthly perspective to get a better sense of what's actually taking place and try to remove some of the noise and get a better sense of those sectors that we want to be playing and those that we want to stay far away from. So let's have a look at what's going on in the markets for this week. So starting off with the 10-year Treasury yield, we've kind of pulled back here quite a bit. To no surprise that we had a correction after this kind of shooting star failed breakout, and now we're correcting towards the 50 and possibly as low as the 200, possibly even below that to about 22. So there's some more downside on the 10-year Treasury yield. Looking at the weekly chart, we're still in this bullish flag breakout pattern. Very often as you break out, you tend to retrace and kind of see if this breakout is for real and see if this trend line finds support around the 50 and the 200, which actually just crossed here on the weekly. We believe it will, and this will be once confirmed, this will be the start of a very, very nice run in Treasury yields. But until this is confirmed support, there's still some additional weakness to be expected. Monthly chart shows that we are still in this bullish flag on a monthly pattern, so we've got some more work to do to break out of this particular formation on Treasury yields. Now looking at gold, this is something that we've covered for a while. We believe that gold has resumed its uptrend here since July of 2017, the one that saw us go from 1204 all the way to 1362. We kind of pulled back here to 1262, and now we're going back up. Now, is it possible we fill this gap here around 1280 in the coming days? Sure, but and kind of retest the 50 on the weekly RSI. Definitely possible. But just looking broader, looking farther out, I think we're going to break out above that 1360 level and make a run for 1400. You'll see why when we look at the weekly and monthly charts of gold. When we pulled back, we found support on the 50 on the weekly RSI, which is very powerful, which also coincided with support on this trendline breakout. And now we're making a run again towards that 1360 level. Next stop will be 1400 in our humble opinion. Now looking at the monthly, we've broken out of a major 5-year downtrend here, and it might take some months to sort things out, but we think that this is going to be the start of a massive run in gold and precious metals as well. So definitely want to keep that on your radar and be looking at some of the top stocks in this sector. High yield daily, we're seeing some weakness here, and so it's something to be concerned about potentially. At this point, it's just some daily pullback. We can see a pullback to about 36.75. Not such a big pullback, but this is trading in such a tight zone that any sort of pullback might create some potential ruffle some feathers here in the market. Now looking at the junk bond weekly, we've been pointing out this bearish wedge breakdown. Now we've been rallying here above the middle Bollinger Band, which is a positive sign, but we've created this negative divergence here where RSI has not been matching price. And so typically if that can't resolve to the upside, if RSI cannot break above that 69 level, expect things to break down, and that could get ugly relatively quickly with all the margin trading that's happening in this particular sector. Now monthly looks very good. There's nothing to complain about here aside from the fact that volume is decreasing with every consecutive month. MACDs are starting to curl towards zero. And so if this trend does continue, that might be some cause for concern. Till then, it's right now just a little bit of noise. Now looking at oil, we made a video that we'll post in the show notes about oil where we kind of well, I don't want to say contradicted the great Peter Brandt, but his perspective was that oil is in a head and shoulders topping pattern. We believe we're in an inverse head and shoulders bottoming pattern from a monthly perspective, and we'll have much higher prices in the not too distant future. And we believe both in the short and long term we're kind of starting a new uptrend. So we'll see who's right there, but bottom line is, looking at the chart, the daily is showing some pretty nice momentum here. We think that we're going to break out above this 53 level in the coming days and expect to see 55 to 60 be targeted at some point later on this year. So why do we think that? Well, weekly is now firmly above the 50 on the weekly RSI. We successfully tested the 50 level, and now we're breaking higher. And like I said, 55 is this next target, but once that's taken out, and we think it will be soon, then we're going to make a run towards that 60 to wash out these hands that are shorting this particular sector at the 200 EMA. Crude oil monthly, this is what we were talking about, potential inverse head and shoulders pattern. If this does break 60, then look out above. There's going to be a lot of short covering. We're very, very close below this 50 level in the RSI. When that breaks to the upside, that often marks massive moves. Now, MACDs are starting to curl back up, which is very positive development, and so we see very little reason for consideration of weakness or potential downside pricing in this particular sector. NASDAQ looks good. There's nothing to show. Talking about really, I mean, there is some daily potential correction coming, but again, longer term, I don't see any weakness at this point. The MACDs or the RSI and the weekly look very good. If we break above that 1670 on RSI, wouldn't be surprised to target that 6750 level on the NASDAQ. NASDAQ monthly, extremely overbought. Bearish wedge breakdown, we're kind of retested from the downside, but beside from that, momentum is very strong, and there's no reason to exit this particular sector. Russell is starting to consolidate here, but I'm seeing quite a bit of pullback here in momentum. So if this can't hold, if Russell 2000 can't hold 1500, expect to make a run towards that 1475 level, possibly as low as 1450 on a potential pullback. So stay tuned on that. But what I am seeing is the MACDs are now below zero, and it's this hottest sector since middle August is now starting to correct. So keep an eye on that particular chart. Russell weekly. Also, you've got why are we pulling back here? Well, RSI here is right below that 70 level, which coincides with the level that we couldn't break out multiple times over the past couple of months here, so in years. So no surprise that we're stalling at this point, but we'll see if this is going to pull back or be the beginning of a longer term correction. Russell monthly looks great, nothing to see there. S&P looks good. Now, taking a look at the TIPS to Treasury yield ratio, this is the one that tracks inflation. We've had quite a bit of a pullback here, and we think that the pullback might have a little bit further to run, possibly as low as that 90 level on the ratio chart. What this practically means is that while inflation is low, then yields will be dropping. And so those sectors that pay high dividends or high yields and fixed income will perform better. But we think that we're in the beginning of an inflationary trend in the market, so we'll see how that plays out. This is why. This coincides very much with the 10-year Treasury yield, which we've seen has broken out of this bullish flag pattern. This as well has retested it from the upside. We've kind of got this hammer going from last week, and we think that we might be a couple more weeks consolidating above this breakout zone and then head higher eventually in the coming months ahead. And now the US dollar, this is one that we've called fairly accurately from the pullback from 103 to this potential bounce play right above the 90 level. Now we're at 94. We've pulled back a little bit. Now we're finding a little bit support here on the middle Bollinger Band on the daily. Coincides with the 50 on the weekly RSI. So we might have another run in the dollar here if it can hold the zero level on the MACDs. But in the longer run, I mean, the dollar looks weak. Look at the monthly here. Now, the weekly has indeed broken out above zero, so that's what's leading me to believe that we might have a little bit some more legs in this particular snapback rally on the dollar. But looking at the monthly chart, this is not what you want to see in the first potential recovery of the dollar, and you're seeing a bit of a pushback from this attempted rally. So with the Bollinger Bands curling downward, the 50 is starting to curl downward. I think eventually we're going to break below the 200 EMA, and that on the monthly, and that will be super bearish. And there's nothing really to talk about on volatility. Finally, I just wanted to point out that the world ex-US markets look fantastic. They've got momentum. They're breaking to all-time highs here, and you just want to be long these particular markets wherever you can. We're just about ready to break above the 2,000 level on the global index, and ultimately we think that this is going to make a run towards that 2,400 level, which would actually be matching the all-time high from 2007. Bottom line is, overall the markets look decent. We might have a little bit of a pullback in the Russell here in the coming days and weeks ahead. Oil looks good, gold looks good, overseas markets look good, and that's about it. So guys, thank you very much for watching. Please do follow us on StockTwits, Twitter, and YouTube at Moniology, and please do support our Patreon campaign, where you can pledge to support our videos here and the work that we do. If you like the work that we do, please make the pledge, and we'll continue to make better and better videos with better quality more often, and more user-friendly experience. Guys, thanks again, and have a wonderful week, and good luck trading.